The S&P, the Nasdaq, and Nvidia all closed at new record highs. So are the bears trapped? Well, it kind of seems like it because momentum is really picking up here, and we could go as high as 9% this month. We also went through and talked about notes, and a lot of these played through. We got higher lows, we got higher highs, we got hollow candles, and that's pretty much the same thing we're seeing here on the Nasdaq. What do we have? A new record high. If we go back to Nvidia, and we'll look at some charts a little bit later in the show, but look here, we had these massive gaps we were talking about. Same thing happened over here. But where things got a little bit funky was when we had this bearish engulfing daily candle to a new all-time high, just like we did here on Thursday. But what happened after that? Well, the last time we failed to make a new all-time high, so the rally halted. We went sideways to down. What happened this time? Well, we went to a new all-time high, and it looks like we're picking up momentum. It looks like the bears are really crying here. Sorry, bears. We kind of warned you, though. So how much higher could we go? Well, so far this year, the S&P has hit its 25th record so far this year, and NVIDIA just became the second most valuable company in the world. Tom Lee says we could rise by as much as 4% to end the month at 5,500. We'll come back and talk about this in a moment. Goodbye, fear. We're back into neutral. Look at that. Whoop. Look at here at NVIDIA. NVIDIA tops, 1 second here. Let's just go back. NVIDIA tops 3 trillion in value. Leapfrogs Apple. Oh my goodness. We even have a Fed cut now priced in for September as the base case. We have roughly a 70% chance of a cut because we add 11 to 58. Whoop, there we go. Another good number. If we look to the heat map now, like I just said, NVIDIA is now worth more than 3 trillion, overtaking Apple, which is worth a mere 3.00. What's so incredible, though, is that if NVIDIA can repeat today at roughly 5%, it's going to actually be bigger than every company. It's going to be even bigger than Microsoft. Can it do it for one more day? Can it go up 5% more? Well, this really comes down to whether or not we're repeating 1995 on the left-hand side over here in the 2020s. And I talked about how we want to see higher lows and higher highs, which we're getting here. We're currently in new all-time highs. This is incredible because we started the week off a little bit weak on this ISM data. And then today we got our first rate cut. Yay, right? Bank of Canada cuts rates and signals more cuts are possible after historic shift. We've come a long way in the fight against inflation, Tiff has said. And he says that it's reasonable to expect further cuts if inflation eases. What does that mean? Hey, it means people are pricing that in around the world. Remember, we have an ECB rate decision tomorrow, pre-market at 8:15. And then we got average hourly earnings and non-farm payroll on Friday. So I do want to come back to that clip from Tom in a second. But what's really important here is that we've only gotten through one of the important dates so far for this month, and we're already at new all-time highs. We talked about this yesterday. ECB is expected to cut tomorrow. Then we got payroll. Then we got the big dog Apple. Are they going to do anything? Right? Then we got inflation. Then we got the Fed decision and all this other good stuff. So Tom is really talking about inflation. We'll come back and look at this clip in a minute. What I just want to show you first is just, again, going back to the S&P and to NVIDIA because we definitely had some warning signs. Our notes here are going to be reviewed on the stream tomorrow. So come hang out with me if you want to see that. But just pause the video if you want to read these here. All we're looking is for the same thing here. We're looking for higher lows and higher highs closing over that previous candle high. The other reason why I'm a little bit bullish, more bullish now, in case you didn't already know, is the same pattern as NVIDIA. What do we have here? We have a bearish engulfing daily candle, right? So a bearish engulfing daily candle. We were tracking that up here over on the most recent move. After we got the bearish engulfing daily candle, we failed to make a higher high, which means we got lower highs, lower lows. And that's what we were starting here so far. I wasn't sure what was going to happen. But then yesterday, today, and really on Monday, we kind of broke the pattern. We got to a new all-time high. So last time we didn't pass, just like NVIDIA, and we showed you. This time we did. And remember, we also even talked about the volume coming in here. So volume generally precedes price. And that's exactly what we got. Volume is usually preceded by price. We got the lower wicks or dip buying. Now they're punching the chart higher with higher lows and higher highs. If you guys don't mind, please considering to smash a thumbs up or subscribing to the channel. I would greatly appreciate that. So as we talked about with NVIDIA, it's pretty much the same thing. Bearish engulfing daily candle, and then we made a new all-time high. Not last time, but this time we did. So if we look forward to tomorrow and the rest of the week, let's see what Tom Lee has to say about why the bulls can keep charging to 5,500 and beyond. Let's tune in.
But you're doing it again. So 5,500 on the S&P. by the end of June. It's hard not to talk about that immediately. Based on, Tom, lower inflation.
That's right. I think there's a fundamental case, Joe, which is inflation is coming in softer than expected. And I think the job market is it's cooling, but not weakening dramatically. And I think that's a good situation for equities. And I think that the sell-off in April actually hasn't really been fully recovered. And that's why we expected a rebound in May, but I think that carries over into June. And there's still $6 trillion of cash on the sidelines, and margin debt's still way below where it was in October 2021. So we know investors really aren't that long yet. So I think that comes together this month with a pretty surprisingly robust move higher.
It is a little bit longer than that crazy call you made. It was based week, Tom. I remember, and it worked out for you. You were right. So now at least you're doing it in terms of a month. In the past, when you have made these calls, it's been about inflation, hasn't it? And that's where it is again. What are you seeing in terms of components that make you confident that those were outliers that we saw a couple?
Okay, so that's probably enough. We watched the clip this morning, and you can find it on CNBC. What I really wanted to show you was just that people are still bullish from here and going forward. So what does that mean? Well, don't fight the trend. Now that we're in blue sky territories, we know exactly what that means. What does it mean? Hey, we're on the highway, right? We're above 480 on the S&P. And now we're out of the town. It's time to go back, pedal to the metal, right? Back into cruise control because the market's at new all-time highs. So what I really want to show you here is that Tom is talking about inflation being the reason to go higher. Well, we're going to face another test on Friday if this is how it comes in. Why? Well, unemployment staying sticky, more people are getting jobs, and the average hourly earnings are expected to tick up. That is not good for stocks because after that, what do we have next? Well, we've got CPI in the 12th, and we got WWDC. That's pretty much it. Then it's the Fed. It's up to Jerome and them. And right now, they're in a blackout period, which means they can't really do much. Here's the part that I find interesting, and I want you to pay particular attention to because as yields are going down, this is the 10-year note here. Why is this important? Well, it's really important because the last time we were here is actually about a year and a half ago. This goes back to October of 2022. And because we didn't actually fail on the head and shoulders last time, this is it. We have to start going lower from here. We cannot afford to mess around. If the bulls are really going to go higher based on inflation, I want to see this 10-year note go lower, lower, and lower. So if we're below 4.28, that's good because it means we're also below our neckline over here on the right-hand side. And that means there's actually momentum building up. That's it for today's show. So maybe you want to subscribe on the left or hang out with me at 9:15 a.m. tomorrow. Thanks so much for tuning in.